We've already had a pretty big move from 140, but if I look at the scale of potential flows involved and the divergence in monetary policy, to me it's a once-in-a-century event, really. We've never had a period where the Fed is about to hike rates over the next few months, while at the same time the second biggest economic bloc of the world is engaging in unprecedented QE with negative rates. So our forecast is down to 85 cents ultimately. I think it's probably one of the most aggressive on the street, but the risk is we get even bigger undershoots.
This happened right before the close in the FXE, which tracks the price performance of the euro currency, and options traded 28 times average daily volume. In about a few minutes to the close, there was a buyer of the January 102.94 put spread, paying almost $2 200,000 times. That was nearly $40 million in premium. And if the ETF is down towards that short strike at $94, the trader can make up to $120 million. That's a massive, massive position.
셰이크섁 recent IPO valuation here is nothing to bang the table at. But it's one of these cult food stocks like a Chipotle, like a Panera. It's early stages, massive growth, and consumers are going to higher quality food, as the McDonald's same-store sales yesterday illustrated. They're not going back. The second stock, RPM International, it's in the materials sector. And here they have about a 40% international exposure. So again, I mean, it's not just domestic plays we're looking at here. But it's attractive within the sector. It's in our dividend model portfolio. They've raised their dividend 41 straight years.
Right.
Virgin America. I mean, Dom just talked about it. It's I think it's an airline that folks have forgotten about. I don't think it's a $34 airline. I think it's a $40 airline. If you look at the February numbers, which overall for the industry were not that strong, but yet Virgin America traffic was up 3.6%, 0.6% in capacity. Lower fuel costs remain. They have a new route right now from Dallas that I think is going to be very strong. They're a niche player.
I think you need to think about what's going on with the monetary easing that's going on in Europe. There's a lot of liquidity being pumped into the system at this juncture. The economy looks like it's starting to do a little bit better. They have a lower starting valuation point than the United States has. So, yes, I would be more bullish on European
stocks.
Well, this
sounds like a good time for a 10% correction in the U.S. markets, according to you.
I think that's probably excessive, but I think that we are correcting right now. And as I said, I think it's difficult to get excited about an environment where you don't get multiple expansion and you haven't got any substantive earnings growth.